So I think ultimately, yes, we're going to get additional spot crypto ETFs. That will include XRP, that will include Solana, that will include Litecoin. It's just a matter of how long it's going to take to get that regulatory clarity.
This episode is brought to you by BitGo, which is a top-tier crypto custodian that has been in the industry since 2013. It's headed up by Mike Belshe, who's a Web 1.0 and 2.0 legend. BitGo provides incredible services in addition to custody. They allow you to manage your tokens, get all types of liquidity, and much more. And some of the companies that use BitGo include Bitstamp Exchange, SWI, the token project, Pantera Capital, that's Dan Moorhead, as well as 21 Shares, which issues Bitcoin and Ethereum ETFs. Some of the great services that BitGo provides includes wallet services, which is secure, trusted, scalable wallet solutions, Prime services, which allows you to get seamless access to liquidity and capital. It also allows you to list, manage, and grow your ecosystem. And they have what's called the Go Network, which is a secure real-time global settlement. Recently, BitGo launched a retail platform that allows you to trade, stake, and of course, custody your crypto assets. And this is a great solution because it provides you with top-tier crypto security, and security is, of course, a big factor in investing in crypto. And BitGo is offering an incredible incentive as they launch this platform where you can get a chance to win Bitcoin. They're giving away at least one Bitcoin every quarter. So if you sign up and have funds on the platform through the last day of each quarter, starting December 31st, 2024, you can be eligible to win some free Bitcoin here. So if you'd like to learn more about BitGo, go to bitgo.com. Link will be in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Nate Geraci, who's the president of the ETF Store and the co-founder of the ETF Institute. Nate, great to see you.
It's great to be back here. Has anything happened since the last time we chatted?
Nothing really. But last week, Nate, we got a flurry of ETF applications on Friday of all days, right? But the big one, which I wanted to get your expertise on, is that the in-kind creation and redemption for the BlackRock iShares Bitcoin Trust. Tell us about this, and why do you think the timing of it happened now?
Yeah, so look, I think that this would be a bigger deal more optically than what it would actually mean for the ETFs themselves. And what I mean by that, Tony, is that there's no question in-kind creation and redemption would make the ETFs themselves a little more efficient because the ETFs would probably track the price of Bitcoin a bit more closely. You'll also probably get slightly tighter trading spreads, maybe a little better performance overall. But these ETFs are already operating with very small premiums and discounts. They trade with very tight spreads, and they're tracking the price of Bitcoin extremely well. And so the point is, I think any improvements operationally will be marginal. The big story is that if this is approved, that's basically the SEC giving the okay for market makers and authorized participants to hold Bitcoin and transact in Bitcoin. That's the big story because right now, there's not regulatory clarity here for market makers. And so if this is approved, presumably that would come with this regulatory clarity. I think that's the real game changer, with this filing and hopefully its ultimate approval. I think it will be approved. And this also ties into the SEC rescinding the SAB 121, SAB 121, because that's obviously going to allow financial institutions which have market-making businesses, that's going to allow them to actually hold Bitcoin. So I think those two things are tied together.
Yeah, and that was going to be my next question. Is this because of SAB 121 getting repealed? And I'm assuming it is because now the banks and all these institutions don't have to look over their shoulder. They can hold these assets directly on their balance sheet without it being treated as a liability, I believe. With regards, and just for the folks who are listening who may not be familiar with this, the in-kind means that they can redeem in actual Bitcoin versus cash, right?
Yeah, but there's a very important distinction here. So that's not at the individual investor level. That's at what's called the authorized participant level. So these are big financial institutions who keep the share price of an ETF in line with the underlying asset, with the price of the underlying asset. And we're talking about transacting in units of, say, 10,000 shares. okay, that these authorized participants do. So here's the way I like to describe this, Tony, if we want to boil this down to basics. I always like to describe an ETF as a warehouse, and that the ETF is simply a vehicle that holds other assets, like a warehouse might hold other assets. And so take gold. I know we're talking crypto here today, but I like to use gold because I think it's an easy example just to understand or conceptualize. So think of someone who puts gold into a warehouse, okay? And in return, that person would get a receipt that says you own X amount of gold that's stored in this warehouse. That person can then take that receipt and actually trade it back and forth without the gold ever leaving the warehouse, right? And if they want to, they could take that receipt and present it back to the warehouse and get their gold back,
Mm.
okay? That's basically how an ETF works. So, with a gold ETF, gold is delivered into a trust, and the ETF shares represent an ownership interest in that trust, and it can be traded back and forth. What's happening with spot Bitcoin ETFs right now is that instead of being able to deliver Bitcoin into the trust or into the warehouse, in my example, market makers have to give cash to the warehouse, right? They're giving cash to the warehouse to buy the Bitcoin. And so it's just not quite as efficient. But in going back to the authorized participants, hopefully I'm not losing people here. That's actually the party who transacts with the warehouse, if that makes sense. They're the one who facilitates the creation and the redemption of those receipts for the ETF shares.
Got it. No, that's a great explanation. I love that analogy of gold in the warehouse. It absolutely makes sense. And of course, I'm assuming this is very good for Bitcoin, because you're moving the underlying asset versus in cash and so forth. And I'm assuming if this gets approved, it will be the same for Ethereum and other altcoin ETFs eventually.
It will. And an important point here is, look, some people have said that TradFi is co-opting crypto or co-opting Bitcoin. You may have seen me tweet about this. I actually think it's the opposite, because think about these large financial institutions, to exactly what you're saying. They have to learn how to transact crypto. They have to learn how to store crypto. That's the first step down the path towards what I believe ultimately will be full tokenization, right? You're having the traditional financial system learn how to interact with crypto. Not along with that, you're going to get regulatory clarity as well, right? So it's both of those things. I just think that's important. I think some people they feel like, again, TradFi is co-opting crypto. This is just the first step down the path towards ultimately crypto playing a much more prominent role.
Mm, absolutely. And I remember, Nate, last year we spoke multiple times, and you talked about in-kind creation. You talked about a bunch of other ETFs that exist in TradFi for other assets that are going to come to this asset class. So do you anticipate that, given the clarity and everything that's going on, we're going to get a whole bunch of new ETF products?
Are you talking about just specifically on the crypto, like the spot crypto side?
Yeah.
I think it depends. So I think, as you know, right now there are filings for spot XRP ETF, spot Solana, spot Litecoin. We even saw a Trump ETF filing last week. And I think the prevailing narrative right now is that Litecoin has a pretty decent shot of approval because it's viewed as being somewhat similar to Bitcoin, right? Bitcoin is obviously classified as a non-security commodity. There's also not outstanding litigation or enforcement actions involving Litecoin. And I think, again, as you know, the same can't be said for XRP and Solana. And so the thought is Litecoin might be in a better position. My take, Tony, is that I think everything is on the table. It's just a matter of how quickly the SEC moves.
Sure.
And I know I've mentioned this in the past, but I think what it comes down to is how quickly we can get clear designation as to which crypto assets are securities and which are commodities. That's what's really needed. It really comes down to how long that's going to take.
Mm,
Now, I will say, if we looked last week, President Trump does seem to be moving pretty quickly, right? But with the new SEC chair, Paul Atkins, he's going to need to get in the door, and we just don't know, what his priority list is going to look like. I think crypto will be up there, but we don't know that for sure.
sure.
And so I'm optimistic, but it's a matter of time. So I think ultimately, yes, we're going to get additional spot crypto ETFs. That will include XRP, that will include Solana, that will include Litecoin. It's just a matter of how long it's going to take to get that regulatory clarity.
Yeah, great point. And I've been saying the same thing. It's not a matter of if, but when. And we got to wait for Paul Atkins to get into office. And then there's other things going on, obviously, in the markets. So I'm hopeful that, we get all these altcoin ETFs this year. It'd be really great for the market. Um, the question that keeps coming up, though, is the futures, right? There's no futures for Solana. There's no futures for XRP. But there's been rumors and breadcrumbs of CME, their beta testing site got released or something like that, showing possibly that's not around the corner. If I'm not mistaken, ProShares, I think they filed for a futures XRP ETF or something like that. It seems like we're getting some breadcrumbs here.
We are, but keep in mind, there's no requirement that there has to be a futures market on a particular crypto asset in
Mhm.
order to have that spot crypto ETF. That's simply the path that spot Bitcoin ETFs walked and spot Ethereum ETFs walked, but that's not a requirement. That's just what the Gensler-led SEC required, obviously, after they were sued and lost to Grayscale. Um, Now, that being said, you do have to have what's called a surveillance sharing agreement in place with a market of significant size, a regulated market of significant size. And in the spot crypto space, the futures market is what is being relied upon
Mm.
for that surveillance. Theoretically, that could be an exchange like Coinbase. But keep in mind, there's currently litigation between the SEC and Coinbase. I think that litigation would have to be resolved. And then theoretically, Coinbase could be a market where you have a surveillance sharing agreement in place, and that would be enough for the spot crypto ETFs to be approved. So the point here, Tony, is that the futures market is not a requirement for the spot crypto ETFs, but you do have to have the ability to surveil a market that is meaningful. The SEC is going to want that in place.
Yeah, that definitely makes sense. And then I know once these altcoin ETFs get approved, and look, we already have Bitcoin and ETH, you're going to see these index ETFs get approved, right? Where you have maybe the top three, top five, or whatever it is. Do you anticipate, though, we may get just a Bitcoin and ETH index approved, ahead of these?
Yeah, I expect those to be rolling out in short order. So I think Franklin and Hashdex both have filings that the 19B4s have already been approved on, if I'm not mistaken. And so I think it's just the S1s, the registration statements that need to be approved. Now, there are filings from Grayscale and Bitwise. So Grayscale is looking to convert or uplist their digital large cap fund. And then Bitwise, they have their 10 crypto index fund. I think the Grayscale fund owns Bitcoin, Ether, Solana, XRP, Cardano, and then the Bitwise fund holds all of those, and then some additional assets like Avalanche and Chainlink. Um, Assuming that we don't get clarity on which digital assets are securities versus commodities, as we were talking about earlier, let's assume that we don't get that clarity in short order. I've actually wondered with the Grayscale and Bitwise funds if they're trying to take advantage of something that says you can own up to 15% of a fund in illiquid securities. And since
Hmm.
both of those funds, they actually have more than 85% in Bitcoin and Ether, if you look at the composition of both of those, I'm just wondering if that's like an end around, if that's how they're hoping to get these approved. I don't know that. That's just my guess as a potential path to approval, even if we don't get clarity on the underlying digital assets themselves. But the cleanest path, which could happen, is again, we get this crystal clear. Here's what is a security. Here's what is a commodity on the digital asset side.
So Nate, that's fascinating, and I didn't even know that was an option. So to confirm, you can have an index ETF. The majority of portfolio is Bitcoin and ETH because you have clarity around those, and
Yep.
a part of it could be Solana and XRP, and those are in a pseudo securities bucket.
Yeah, I don't know that the SEC would actually get comfortable with that. I'm just speculating that that's potentially a path that Grayscale and Bitwise may be looking to pursue. Just because if you look at some of these other assets, I mentioned, say, Avalanche or Chainlink, we just don't know how long it's going to take. Even if we get clarity, maybe that just starts with Solana and XRP and a few other assets. We don't know how far down the market cap table that's going to go.
Hmm.
And so that could take a long time, right, to have that Grayscale and Bitwise fund, to have those funds uplisted. And so I'm trying to brainstorm, okay, how might they be able to bring that to market? And that's one potential avenue that I could see them pursuing.
That's interesting, and great perspective. I'm sure they're probably gonna look to get any angle in as possible as this market heats up. Um, and then I know the big question that people have, and this is obviously speculating because we're waiting on Paul Atkins to get into office, staking in ETH ETFs. I feel like that's going to be so impactful for the Ethereum ETFs.
I do. And I think we've talked about this before. I'm still highly optimistic that this will be approved in 2025. I think maybe even sooner rather than later.
Mm.
But there are a few operational considerations here for the ETFs themselves, because when you stake ETH, it's obviously locked up, right? And so an ETF is going to have to plan around that from a liquidity standpoint. So in other words, if a spot Ether ETF had significant outflows, let's just say hypothetically, right?
Mm.
Investors want their money back and the ETH is staked, well, then that could present a short-term liquidity challenge for the ETF, right? The ETF
Yeah.
wouldn't have the ETH or the cash on hand to give back to investors. Now, that's a fairly easy problem for an issuer to solve because they can just get a line of credit, or maybe they just don't stake a certain percentage of ETH in the fund, right? So they always have that liquidity on hand. So this isn't some huge issue, but I do think the details will have to be worked out to where the SEC is comfortable. But, like we're talking about with some of this other stuff, I do think it's just a matter of time. I mean, this seems like an easy one. And, to your point in terms of the spot ETH ETF demand, I do think that not having the staking has been a headwind.
Mm.
That said, if you look at the yield on staking ETH, we're not talking about a huge, percent of the return here, right? So I don't know again, it's been somewhat of a headwind. I don't think that's been a primary reason why the spot ETH ETFs were maybe a little bit slow out of the gate.
So would it be like, let's say on an individual basis, Nate, I come to you, you're my financial advisor. I'm like, I want to get exposure to the ETH ETF. And I said, look, 50% I want staked and the other 50 obviously not locked up. Would it be like that?
No, because the ETF's going to have it spelled out very clearly how much ETH they're staking at any point in time or what the parameters are around that. So you as the advisor would be buying the ETF and you're going to rely on whatever the ETF's rules are around staking. And my sense is, again, they're going to work with the SEC. The SEC may put some limits on this. I'm completely making this up. Maybe only 75% of the ETH in an ETF can be staked or something along those lines. Or again, maybe these ETFs, they have a line of credit. So if there was some massive outflows, they could meet those redemptions via the line of credit. There's ways to work around it. But in terms of what the ETF would offer, that would be spelled out pretty clearly.
Maybe this is a dumb question. Would it make sense to have ETH ETF direct holding just like the Bitcoin ETF, and then ETH S for ETH staking? So you buy that separately, and that's not moving.
No, I mean, I think what you're going to see is all of these, if I'm understanding your question correctly, I think all of these spot ETH ETFs will move to where they're all engaging in staking. I don't
Oh,
think there's going to be any distinction
got it.
because it's going to be a competitive disadvantage if you're not staking, right? So
Okay.
that's just going to be, no pun intended, that's going to be table stakes for the ETF itself. They're all going to stake. It's just a matter of what that looks like in terms of what percentage of ETH is being staked.
Okay, that makes sense. And I guess once they figure that out, it's going to be easy to apply that model to Solana and Cardano, where you can earn rewards in some way, staking to some degree.
100%. The other interesting angle here, look, my sense is that most issuers will provide the staking revenue back to the end investor because I view it as like a dividend,
Yeah.
right? And so if you have a stock dividend ETF, that dividend's provided back to the investor. If you have a bond ETF, that interest goes back to the investor. But I could see a scenario where maybe the staking yield is used, some of that revenue goes back to the issuer. And so that'll be interesting. There was some talk of if you have the staking yield, maybe that offsets the ETF's fee in some capacity. Again,
Mhm.
I think most issuers are just going to pass that along to the end investor, but I think that'll be something to watch as well.
It's interesting. Well, I can't wait for that. I think it's just going to be so impactful for ETH, and then obviously other proof of stake blockchains later on. So Nate, I wish I didn't have to ask you about this, but meme coins. I can't believe they filed for a Trump spot ETF. I look, I believe in the free market. I understand people invest in meme coins, but it's so risky, it's so volatile, it's so crazy. What are your thoughts on it?
Ooh, I have a lot of thoughts here. First of all, I think I share your sentiment in that I'm, largely free market. And as long as risks are properly disclosed, I do think investors have to take a responsibility for what they're putting their hard-earned money in, right? So as long as everything is spelled out, it's properly disclosed, I do think investors should have the option to invest in whatever they want to invest in. And it's funny just talking about meme coins themselves. We'll talk about the ETFs here in a minute. Um, Tony, I've seen a lot of debate out there. I think most investors, or I don't even want to call them investors, most people buying meme coins, they know exactly what they're getting into.
Gambling.
It's speculative by nature. They know what they're buying. I don't think the vast majority of people are being misled in any way. And so I get the whole term of rug pull and all of that, but if you're going to dabble in meme coins, I would think that that's a risk that you may buy in and the thing goes to zero the next day. And so now let's apply that over to the ETFs. I don't have a problem with wrapping meme coins in an ETF, but there's a couple things that I'll say. I think one, I don't think there's going to be demand for these. And the reason why is most people who are going to be interested in dabbling in meme coins, they're doing it direct, right? Somebody's not going to go buy a Trump meme coin ETF. They're going to go through their Phantom wallet and buy it direct, right? I mean, they're not going to use an ETF for that. It doesn't make any sense. The other thing too is there's some reputational risk for the ETF issuers themselves. Theoretically, these issuers want to be, well thought of on Wall Street. And at some point, if you're offering some of these products, I do think there's a perception issue there for issuers. And I don't know how many are going to want to pursue that. But it's a fine line. I mean, where do we draw the line? Should it be drawn at, Dogecoin? Is it further down the list? Is it, Trump coin? There's not a clear, black and white as to where you're going to draw that distinction. Like I saw Bitwise, who I think very highly of Bitwise. That's a very reputable firm.
Yeah.
And, they set up this trust in Delaware. It looks like in preparation to file for a Dogecoin ETF. Surprises me a little bit. But, maybe they view that as there's potentially a market there. So my point is we're going to have to find out, where that line is, where it shouldn't be wrapped in an ETF. But I just don't think there's going to be a lot of demand for something like the Trump or, Bonk or some of these other ones. I just don't see that happening.
And usually the people going the ETF route are not degens or people who are, into the gambling aspect. They're more investors. If hoping not
100%.
insulting.
Exactly. No, that's exactly what I'm saying. And I just think that, this is grandma and grandpa are not going to have the Trump
Right.
meme coin in their ETF, right? We're talking probably primarily younger, more tech savvy, traders who are even dabbling in meme coins to begin with.
Absolutely. Nate, if a Trump meme coin ETF gets approved, what's going to happen? Is it going to be the end of the world?
But that's where it goes back to what I was saying before. I truly think everything is on the table. I think that's what makes this year really fascinating. I'm calling this the year of crypto ETFs. And that doesn't mean I'm endorsing any one ETF or I'm happy that this is happening. I'm just trying to call things like I see them.
Yeah.
And clearly the regulatory winds have shifted. I've said it's more than a shift. It's like a hurricane now blowing completely the opposite direction that it was under the previous administration. And so I just don't think we can rule anything out. There's nothing that would really surprise me that we see, at least on the ETF innovation side.
So on that note, and maybe it's a little bit too early to judge this, but are you seeing on your side, on the business side, and even maybe your competitors and so forth, with this change, are people more optimistic about crypto ETFs? Are they more interested?
I still think that there's a significant education hurdle here. You and I, you more so than me, you're in this pretty deeply every day. I'm in it fairly deeply. But if you talk to just the average investor out there, they're still not familiar with crypto. They don't get it. They don't understand it. I've always said the best way to learn is to, you have to be hands-on. You have to go, buy some coins, move them around. And again, to you and I, this is very basic stuff. I'm just telling you, when I talk to the average investor out there, crypto is really not even front of mind. Now, I think that it's moving more that direction. Certainly some of the things that we're seeing out of the administration, and we can talk about that, this crypto executive order, so on and so forth. There's going to be more headlines out there that people are reading about in their local newspaper or USA Today around crypto, and they're going to have questions. But it's still so early here. And there's still a lot of skepticism. I'll tell you, just on the TradFi side, I talk to advisors all the time. And a lot of advisors are still very skeptical of crypto overall. Even though, Bitcoin now has a 16-year track record. You look at Ether's track record, and just look at on the political side. I mean, some of the conversations that are being had around XRP, and there was a headline in Bloomberg over the weekend that the new Department of Government Efficiency is looking at public blockchains to streamline, make more efficient some of the government processes. So I just think that it's still very early. A lot of education needs to be done, and that education will help alleviate some of the skepticism that's out there, both among investors and advisors.
This is why I love having you on, Nate. You bring a very different perspective, and you have one foot in kind of like in TradFi and the real world, and then one in crypto. So you see both sides. So it's really great. So I mean, Nate, are you expecting aside from the ETFs, but just the overall market, a boom this year, with the executive order, new SEC chair, more favorable Congress, you got a Treasury Secretary that's pro-crypto and much more. It seems the stars are aligning here.
Yeah, I can't make any price predictions because I am an SEC registered advisor, so I won't comment on whether or not I think there's going to be a boom here. I think, again, clearly the regulatory winds have shifted. I think that's a positive. I do think the broader macro environment will play a role here. What happens with interest rates? Certainly if interest rates were to come back in, I do think that that's more supportive of crypto, but that may not be the case. There are some concerns that the new administration, some of their policies may be much more inflationary, and perhaps we see rates tick up. If that happens, I'm not saying that is automatically a negative for crypto, but that could be a headwind for crypto. If you look last year, certainly the returns out of the crypto space overall were unbelievable, just fantastic returns. Can you string together another year like that or anywhere close? That doesn't always happen. Sometimes it's 2 steps forward, 1 step back. And so I think there are a lot of factors at play here. I'll answer the question from just more of the regulatory backdrop and from an ETF innovation side. I think certainly there is a lot of things to be very positive about there. And I do think just in terms of ETF filings, we will see a boom on crypto-related ETF filings and crypto-related ETF launches.
Do you think a Bitcoin reserve bill getting passed where the United States is actually saying, hey, we're going to hold on to that 200,000 plus Bitcoin, and we're going to start buying maybe in 2026 and after, that would be a catalyst going back to the education and awareness front? Like, wait a minute, the United States is holding Bitcoin like gold?
I think every one of those types of headlines helps. And that's what I was getting at before, just talking about average people, everyday investors reading some of these headlines in their newspaper when they see something about an executive order on crypto or perhaps a strategic Bitcoin reserve. Those are things that go, okay, maybe this is an area that I need to spend a little more time understanding. And I either need to do that on my own or perhaps my advisor needs to help educate me on that. And so then what happens, let's take that latter example. If you have people starting to ask their advisors questions around this, well, guess what? The advisor better be educated and better be conversant in the topic. So then the advisor goes and they spend time getting educated on the topic. And then all of that is just supportive of, I think, the crypto ecosystem overall, right? I've always said, this is no prediction on price. You know this. Crypto is not going anywhere. This is something that's here to stay. Yes. So you can either embrace it, you can learn, you can become educated on it, or I truly believe you're going to get left behind because this space is moving at light speed. I mean, I try to follow this closely and I can barely keep up. I mean, it really feels like, you're drinking off a fire hose. But my point is, as an advisor, you have to understand this stuff, whether you like it or not, whether you agree with it from an investment perspective or not. And I'm not one of those, blockchain, not Bitcoin or guys like that, but I'm just telling you the technology itself, it's here. And, especially with public blockchains, well, how are those public blockchains powered? Guess what? It's by the underlying, crypto asset, the digital asset itself. That's the incentive to keep the blockchain secure and moving. So you can, make of that what you want. But my point is, yeah, I think that the every headline you get like that is supportive, and that then helps in getting people educated. And the more people become educated, I think the more people go down the rabbit hole. That's what happened to you. That's what happened to me. Once you start learning, you want to learn more, and your eyes are wide open. You see, okay, this is something that is not going anywhere. It's here to stay.
Well put. And then as you're saying that, I thought of with the rescinding of SOB 121, JP Morgan, Bank of America, they can all now buy Bitcoin ETH, hold in a balance sheet, and I'm sure they're going to offer it to their retail clients. I'm assuming that's what's coming down the road.
Yeah, I would think so as well. But I also, just from an ETF perspective, one of the criticisms when the spot ETFs launched last January is that Coinbase was a primary custodian for all of those ETFs. And, as far as I know, Coinbase does an excellent job on their, professional custody of crypto assets. We've seen nothing to indicate otherwise, but there is some concentration risk there. And especially with how large these ETFs are now, that was one of the reasons I was very critical of SAB 121, is because, effectively, I think what you want is your most trusted financial institutions to help custody these crypto assets. That actually reduces risk, especially in the spot Bitcoin ETF. So I think that's going to be a benefit. And then to your point, yeah, I think we're going to see these institutions have different solutions, especially, on the private wealth side to higher net worth investors. I think everything's on the table there as well.
Nate, always great insights, always great perspective. Thank you so much.
Always fun. Appreciate you having me on.